So good evening, champions. I welcome you all to another session on IE IFS. Particularly, we are talking about Module C, and the topic or the chapter which we are starting today is unit number 23. I hope that you are doing every bit of your effort which will help you in cracking this exam of JAIIB in May 2025. Every minute effort from your side will have an incremental effect on your preparation and will ultimately bring you the 2 increments which you are looking forward for. So on that note, let me just start this session with a suggestion that I want your participation via the chat box. If you have any doubt, just type your doubt in the chat section and I will reply. If you are watching this in the recorded format, leave your doubts in the comment section. It is very, very important for us as a team to know that whether the students, whether the participants are having any doubt or not, whether they are able to make sense out of these sessions or not. So do leave your feedback as well as your doubts if you have any. Okay. Let's start today's session, that is unit number 23, Development Financial Institutions, DFIs. When we talk about DFIs, unlike commercial banks, they are not that popular. Let's just face the reality. This is the reality. Commercial banks have their branches in every city, in every location, in every market also. But have you seen any DFI having their proper offices in every market, every city? The answer is no, clear no. Okay, you can argue that LIC is one of them, but this is a very rare phenomena. Have you seen NABARD's office, NHB's office, or for that matter, EXIM Bank office? No, answer is clear no. But have you seen the office or the branches of ICICI? A big yes. Many of you will say yes, we have seen it. To your surprise, ICICI was initially a DFI formed specifically for industrial growth, investment corporation. Okay. So the agenda, the point which I want to make here is that ICICI right now, it's what? It's a bank. It's a banking institution, banking organization. But it was initially set up with World Bank, Government of India, and some industrial representatives as DFI. Okay. So why I'm telling you this? Because we can have the relevance of this session. Relevance is very, very important whenever we start any session. So the relevance of DFIs is multifold. You will come to know about various things today, that how DFIs work. I'm not discussing the year of formation specifically. N number of institutions are there when we talk about DFIs. So each and every institution will not be discussed, that's for sure. But what I want to make a point here, that after watching this session, you can clearly distinguish between the functions of a commercial bank and the DFI. So start with the introduction. Then what is the DFI, Development Financial Institution? What is its role in India? Because we are residing in India and we must know the role of any financial institution which is present in our country. Major DFIs in India. Now, major DFIs is a term which can tell you that there are approximately 7 to 8 major DFIs. But due to the paucity of time, with the limitation of time, we'll be sticking to 3 institutions only in this session. Okay. So apart from this session, you have to dig deep into various topics, various DFIs also. Fine. So let's start our first topic, which is the introduction. So in introduction, if you ask about the lending provided by commercial banks, they do what? they provide lending in short term. Short term lending is there. Now somebody will say that, okay, home loan is being provided by them. Okay, I agree. But mostly the lending is what? The maximum tenure of lending is what? It is 3 years, 5 years, 7 years, not beyond that. Okay. So what is the need of DFIs? As the name suggests, DFIs are development finance institution. Development finance institutions. Now, what do we mean by development and what kind of development these financial institutions are taking care of? Specifically, the initial idea of DFIs was to provide the industrial growth. Okay, industrial growth along with some investment opportunities for the foreign companies. In today's world, or specifically in today's India, these DFIs have well-defined roles. NHB pertains to housing. NABARD pertains to agriculture and allied activities along with rural development. SIDBI takes care of small scale industries, their development, MSMEs. Then we have EXIM, export import. All those regulations are being followed and the transactions are being monitored, regulated and done by that bank. LIC, specifically for life insurance. Okay, so this is just an overview and there are n number of organizations. NABFID, the latest one, it is for what? In 2021 only it was formed. What does the function of NABFID tells you? That it is having which aim, which developmental sector it pertains to. Do let me know in the comment section, or if you are watching live, then in the live chat section. So this thing is clear that development financial institutions are here for developing a particular sector, a particular segment of society also. Sometimes like small scale industries pertain to what? People who are residing in villages, in rural areas. Rural development, NABARD, again rural areas. Okay. So when we talk about commercial banks, they have limited resources. They have to maximize their profit, and in order to maximize their profit, they must target all the groups present in the market. All the groups means all the individuals. They cannot just say that we will lend only to rural areas. No. By that, you won't be able to maximize the profit. A. B. It is for the short duration, short-term lending is happening. Personal or individual development can happen via lending of commercial banks, but a structured way of transformation which is required for the economic development, that will never happen when we talk about commercial banks. Okay, they are considered as the backbone of the Indian economy. Yes, hands down, they are there providing funds for the resurrection of the Indian economy. But DFIs play a much larger role because they take care of the specific sectors. Fine. So commercial banks provide short-term resources. Their ability to lend for long periods as required for infrastructure projects is limited. Whenever we talk about infrastructure, module A, it has one important section within itself, that is social infrastructure. The external marginal benefits of physical infrastructure as the social infrastructure. Physical infrastructure becoming the social infrastructure. Okay, so this type of role is being played by DFIs, which is not in the domain of your commercial banks. DFIs are also known as development banks. Now, when we talk about development banks, one thing which we have seen in module A, when we talked about the international organizations, World Bank was what? It was termed as the world's largest development bank. Why? Because of the activities it is involved in. Now, World Bank is involved in which kind of activities? Various activities like lending via IMF, like alleviating poverty from the entire globe, providing basic education for the underdeveloped countries, hunger, various projects of World Bank cater to hunger, eradicating hunger, welfare measures. So specifically it is talking about society. That is why it is known as the largest development bank. A society's development will happen when we have all the segments of society, all the sectors of economy with same platform to rise. Okay, equality, egalitarian society. They play significant role in provision of long-term credit, contributing in capital formation for sustainable growth or the sustained growth. Most DFIs extend direct finance. Okay, why I have written most here? Because some DFIs like NABARD, like SIDBI, they are involved in financing various projects indirectly as sponsored institutions. We will see, if you are working in regional rural bank, you will vouch for this thing, that various projects related to agri credit, they are being funded by NABARD, or most of the projects, not various, most of the projects. And when we talk about the PSL norms, the priority sector lending norms, whenever developmental activities are being asked or are being discussed in the banking industry per se, we have the most important regulation or the norms as PSL norms with us. RBI started this concept along with Government of India based on the developmental needs of agricultural society, of semi-urban areas, of rural areas. And in those PSL norms, what is the major event or the major, you can say, condition? In module A, we have studied this. I hope that everybody knows that PSL norms are there. Higher of A and BC or CEO BE, whichever is higher. Something, can you recall? Even if you are not able to recall, but in this chapter, why I am mentioning this PSL norm? Because there one term is written, that RIDF, Rural Infrastructure Development Fund, managed by NABARD. If the commercial banks, RRBs, small finance banks, or in some cases foreign banks also, if they are unable to disburse the required amount of credit to the PSL sector, then the funds will be forwarded into this, that is RIDF. PSL norm is for the development of various segments of society, fine, and this RIDF is being managed by NABARD, which is what? It is DFI. Okay, so giving you example of World Bank, NABARD, I have tried that you understand the magnitude of the importance of DFIs. Okay, now let's move on to the history of DFIs in India. When was the first DFI set up in India? How the important DFIs have panned out through the timeline. So let's see. First DFI was established in 1948, just after the independence. IFCI, that is Industrial Finance Corporation of India, was the first DFI of India. You must remember this fact. It can be asked in the exam. Followed by various state financial corporations, SFCs, via SFC Act 1951, right? 1951. Then ICICI, erstwhile the DFI, in today's world a bank, it was set up in 1955. See how old this DFI was. Okay, because now it's a bank. LIC 1956, NABARD 81, EXIM 1982, NHP 1988, SIDBI 1989, and IDFC 1997. Now, when we talk about these DFIs, keep one thing in mind, that many of them were a part of a parent DFI, and after accumulating the function, after extracting the function from the parent DFI, they themselves were formed as a DFI. Like in EXIM Bank, earlier when we talk about EXIM, that is export import, the functions of IDBI which pertain to export and import were being taken care by one particular department of IDBI earlier, but that department got separated, not because of conflict, because of the requirement of the market, and became the EXIM Bank. Also, the SIDBI, IDBI used to take care of the small scale industries also, but in 1989 that particular domain was extracted from IDBI and SIDBI was formed. Fine. After carving out this SSI function, small scale industry function, from IDBI, and so on. We have many examples. Important ones are these two. Okay. And the latest entrant into this DFI is your NABFID. NABFID for the infrastructural development. Fine. Infrastructure financing. National Bank for Financing Infrastructure and Development 2021. Okay. So this was a brief history of DFIs in India. One important thing which we were discussing in the last slide, that while the DFIs extend direct finance mostly and indirect finance and are refinancing institutions like SIDBI, NABARD, NHB, which have regulatory as well as supervisory role. Now in COVID era, I'm giving you various examples so that the session is not boring. Otherwise, though, it is what? It is only the year of formation, what was the objective, what kind of role it is playing, what were its branches. These are what? There is nothing to explain, but the evolution of DFIs can be made interesting. Okay. So when we talk about the COVID era, during COVID, one loan, after COVID in fact, post-COVID, one kind of loan was disbursed to the street vendors, that is PM Swanidhi. One kind of credit, you can say, was disbursed for the street vendors in the form of PM Swanidhi. PM Swanidhi. Now this particular credit was provided by banks. Fine. If you were there in 2020-21 in the bank, you must have disbursed such kind of loans yourself, or in your branch you might have seen that such kind of loans were disbursed by the credit officers. So it was disbursed by the banks. Okay. But the portal where this particular loans information was given was SIDBI. Okay. You have to go to the portal of SIDBI and enter all the information of the disbursement or the application of PM Swanidhi loan. Why? Because it had the regulatory or the supervisory role for this particular product. Likewise, many products you can see. Okay. So role of DFIs, before that you must know that the DFIs collaborate with banks, they supervise banks. Apart from RBI, RBI is the regulator of the banks, hands down, it is the fact. But the supervisory role of various DFIs is also important when we talk about implementation of various schemes via banking sector. Okay. So what is the role of DFI? What does DFI do? What it is doing right now, what it used to do. Let's see what it used to do. Started off with industrial development. The growth story of our industrial sector will be written by DFIs. It was the agenda or the slogan of Government of India. To extend term loan for setting up of new units, as also expansion, modernization, and thus had a wider diverse asset portfolio. This portfolio thing was very, very important. Earlier, before this DFIs were established, what used to happen? We were not even having the commercial banks with us, leave aside DFIs. private money lenders were there, via which we used to disburse various credit limits. Fine. One second, guys. Is there any issue? Everything is working fine, na? Let me just check. One second, one second. There should not be any issue, but let me just revisit. Okay. Fine. Now I hope that everything is fine. Okay. So yes, the asset portfolio was increased and DFIs were tasked with project financing pertaining to the industrial development. Tenure of the financial assistance, usually in the earlier times, it was around 10 years. The DFIs were funded by government, provided equity capital. The equity capital provided by the government. This was the source of funds for DFIs. And preferential market access, various you can see the channels which are being provided for that access, for raising medium long-term resources. So the important sources or the channels were SLR and tax saving bonds and your National Industrial Credit Long-Term Operations, LTOs, NIC. Fine. External commercial borrowings were also there, because in DFI we will see the important one as ICICI. It was financed by one external agency, but okay, not directly related to ECBs, but yes, ECBs were also one of the part from where the funds were raised for DFIs for their sustenance. Okay. Now next we have DFIs borrowed medium and long-term funds at fixed interest rate, no floating one, only the fixed interest rates, that you must remember, for lending of medium and long-term projects. One important thing is this credit authorization scheme, CAS, restricted the commercial banks in going for large ticket long-term lending. See, whenever a particular economy is evolving and its credit domain, its advances section is also parallelly developing, you won't take risk. Fine. In the age of development of any sector, risk should not be taken. That is advisable by various economists. And such was the case with the commercial banks also. They were risk averse. They were avoiding the risk. So one void has been created during that time. After independence, one void was created. If somebody from the industry, from the corporation, wanted a big loan, amount as well as your time duration is also huge, then there was nobody to lend to them. Okay. Access to ECBs by corporates was not permitted. External commercial borrowings by corporates was not permitted. It was prohibited in India. Capital market was narrow. Right now, though, we see it's a very, very broad market, boom, and shallow with fewer participants. But during that time, no, it was not as robust as it is today. Activity in the debt market was absent, which created good platform for DFIs, which gained by extending medium and long-term loans to green and brownfield projects with good interest spread. So the void which I was talking about, the void was created, and this void was filled by DFIs. Okay. From here, the role of DFIs will start in the Indian economy. And after the LPG reforms, the DFIs started doing what? They started financing the greenfield as well as brownfield projects. Greenfield is what? In FDI terms, it is a project wherein a multinational company will come to your country and form a subsidiary, like Pepsi is there in USA. When it entered India, it runs its business with the business unit name as Pepsi India. So that is what? That is your brownfield project. Greenfield per se is nothing but if a particular company, if a foreign investor is acquiring certain stakes of Indian company, like one Japanese medical company took the shares of Ranbaxy India and right now working in India only, that this kind of setup will be termed as greenfield project. Okay, so in these types of projects also DFIs play a role. Okay, now changing roles of DFIs, how it has changed. Earlier we have created a setup that yes, this void has been created and the void will be filled by DFIs. Now, initially they were interested only in the development financing, but after the LPG reforms, after the constitution of Narasimham committee, various findings were there of Narasimham. Mr. Narasimham said along with the team members that we must promote universal banking. Why? Because the competitiveness must be there in the market, be it your banking sector, be it your any other sector. If your organization lacks competitiveness, it cannot sustain itself, and that thing happened with DFIs also. So the concept of universal banking was introduced in DFIs, and ICICI Bank is one of the product of this particular universal banking thing. Okay, so how the DFI's role have changed? This is the answer. Earlier there was no such you can say intention of the government of India to give them a scope, to give the DFIs a scope that yes, they can transform themselves into a bank, but it was later on developed. DFIs to have the option to transform as banks. Okay, now what is a universal bank? I hope everybody knows. A bank which can take care of deposits as well as other functions, lending functions per se. Strengthening the regulatory framework of RBI. When we talk about the banking industry, RBI is the regulator. But when we talk about DFIs, they are being self-regulated from day one, and creating an umbrella of regulation or supervision for these DFIs was an uphill task. But ultimately, the government of India along with RBI has created a specific pattern which will govern the lending function of DFIs. It was the result that the universal banks were born. Okay, the DFIs particularly were regulated by various entities. Some were self-regulated, and ultimately once they had the robust regulatory framework, they landed up into universal banking. And as I was telling you, ICICI transformed itself into a bank. Government also recognized this thing. As per RBI's policy for DFIs, government in 2002 made its intentions for resolution of problems being faced by some DFIs and recognized that some reforms are required. See, when we talk about DFIs, development financing institutions, development financial institutions, their major aim is to develop the Indian economy. But if they are not making any profit, do you think that they can sustain themselves in longer run? Answer is a clear no. So in 2002, there was a time where government also realized that we won't be able to sustain these DFIs if they are only performing the functions of development. That is why they said that you can have your subsidiaries in various domains of finance. Okay, so like your IDBI, initially it was IDBI group, IDBI bank formed, ICICI group, ICICI bank formed, and so on. Okay, now let's start with the important DFIs. First one being ICICI. Now why this is important? Because it talked about the industrial credit, which was the initial aim of developing DFIs in India. Full form: Industrial Credit and Investment Corporation of India. Investment. Okay, so it was established by the initiative of World Bank, Government of India, and some representatives of Indian industry. Formation year 1955. We have discussed this in the first slide only. Main objective was to create a DFI for providing medium and long-term project financing to Indian businesses, Indian industrial credit. Until 1980s, late 1980s, 1987, 89, the main focus of ICICI was on project financing, providing long-term funds. But after the liberalization process, after the LPG reforms, with its subsidiaries and group companies, it started to offer many products and services. After the globalization was implemented thoroughly in our country, more products were provided to its clients, and ICICI Bank was incorporated in 1994 as part of your ICICI group. So basically, what the point here, what I want to make is that ICICI was initially a DFI, and as the recommendations of Narsimham Committee were out in the Narsimham Committee 1 only, ICICI established a bank, because any institution will sustain only if they are having funding. If government is not competent enough to provide the funding, they must find their own ways to raise funds, and ICICI did that thing only. Now, some important points regarding ICICI. In 1999, it became the first financial institution of non-Japan Asia to be listed on NYSE, that is New York Stock Exchange. Conversion of DFI into bank, also known as universal banking, offered ICICI the ability to accept low cost demand deposits, offer more wider range of products and services, including opportunities to earn the non-fund based income as your banking fees, as your commission, the COBE of balance sheet. In March 2002, ICICI was merged into ICICI Bank. Fine, ICICI Bank in March 2002. So the ICICI group ceased to exist in 2002, and we are left with only ICICI Bank to create the first universal bank in India. So first to be listed on NYSE as a country which is non-Japan Asia, and the first universal bank was what? ICICI. That is why it is very, very important. Following this merger, ICICI Limited ceased to exist, and we had only ICICI Bank as of today. Okay, now let's move on to IDBI. IDBI, again, Industrial Development Bank of India. Industrial Development Bank. DFIs are also known as what? DFI is equal to Development Bank. Okay, fine. Now, what is the purpose of Industrial Development Bank of India? It was more or less to have a robust regulatory framework with RBI, because initially it was set up as the wholly owned subsidiary of RBI only, unlike ICICI. Okay, so some very large projects of national importance required financial support. That is why IDBI was born in 1964 as wholly owned subsidiary of RBI. Ownership was transferred to central government in 1976, thereby changing its nature as state-owned autonomous corporation. In 1994, the Act was amended, IDBI Act was amended to permit the public ownership up to 49%. 95, it raised more than 2000 crore. See the magnitude of amount here. 2000 crore in 1995 only. Through its first IPO. Very robust organization, I would say, IDBI. till recent years also it was a robust organization. Still it is doing good, but again not comparable with the largest public sector bank. Reducing stake of government to 72%, which was ultimately reduced to only 58% in 2001. Now the LIC also has some stakes here. Okay, so the same thing which happened to ICICI here also happened with IDBI, that the ICICI Bank was formed through the you can say remains of ICICI group. Same happened here. IDBI was converted into banking company, that is IDBI Limited, while continuing to play as a role as DFI. Desirous of fueling its business growth, IDBI merged its subsidiaries, the erstwhile IDBI Bank and IDBI Home Finance Limited, HFL, with itself. Then this IDBI Limited also changed its name to IDBI Bank Limited as Universal Bank. Again, Universal Bank was born. The only distinguishing factor between ICICI and your IDBI was what? It was that earlier in ICICI Limited, one bank was formed as a part of this group. But here the banking company IDBI Limited was formed, and this IDBI Limited merged the roles of IDBI Bank and Home Finance into one. And after that, we had what? Reverse merger of IDBI. Okay, this process happened in 2004. Important year to remember. Fine. So if you have any doubt now, you can just ask me. I can see participants are there in the session. So if you have any doubt, any query, any feedback you want to share, just type in the chat section. Okay. Fine. Now let's move on to SIDBI, Small Industries Development Bank of India. Small industries, this is the keyword. Small Industries Development Bank. Okay, Development Bank is the another name of DFI. So small industries refer to what? Small scale industries, part of MSME in today's India. 1990, it started its operation after the enactment of Act of SIDBI 1989, and it was there for your development and financing of small scale industries and to coordinate functions of others. Commenced operation on 2nd April 1990 as subsidiary of IDBI. Point to be noted here. The point which I was making in third or fourth slide, that many subsidiaries will leave its parent organization and form one DFI on its own, like SIDBI did. IDBI had some functions related to small scale industries. One department was there. This particular department was extracted from IDBI to form another DFI, that is SIDBI. Okay, so the parent organization was IDBI. Fine. By taking over the portfolio related to small scale industry, it was responsible for administering the Small Industries Development Fund, Small Industry Development Fund, SIDF. Like RIDF is what? Your Rural Infrastructure Development Fund. And National Equity Fund, National Equity Fund, administered by IDBI. Okay. Fine. Now, the primary financial institution for promoting, developing, financing MSME sector, besides development of MSME, SIDBI is also involved to promote the cleaner production. Fine. Now, what is the main agenda here? What does SIDBI engaged in? Where SIDBI lies when we talk about the project financing? SIDBI basically aims at the MSME sector, its financing, its promotion, its development and coordination between various enterprises, MSME enterprises. The important point which you must know is that presently Government of India and 22 financial institutions hold shares in SIDBI, largest three being Government of India, SBI and LIC. So Government of India plus SBI plus LIC, they hold largest stakes in the SIDBI. Fine. Okay. So this was it from my side. If you have any doubt, you can just ask me, or if you are watching this in the recorded format, you can just comment in the comment section whatever doubts you have, whatever feedback you want to give us, plus what is the type of session you want. Do you want any strategy type of session? Which kind of strategy you want? Do you want some session pertaining to only formulas, pertaining to only practice of numericals, practice of questions, or you want more conceptual, you can say, sessions, other sessions related to conceptual understanding? Fine. So if you have any doubt, any feedback, just tell me in the chat section. Okay. Fine. So one news for all of you is that we have launched our increment pack. You must be aware of the Mahapack 2.0, but we have launched a specific product which will take care of your needs and your wants. Your need is what? You need some exam relevant strategy, some exam relevant course which will help you to crack this exam. And you have certain wants, like we have received n number of queries wherein the participants of our classes, they have complained that we do not have any product which specifically has the logo or association with Officers Adda 247. So your point was being duly noted by our team, and we have come up with the merchandise specifically for our users, for the users of our classes, live classes, the courses, the paid classes, you can call them. What is the objective? Objective is to imbibe the sense of belongingness in your daily routine, that yes, if you are taking notes, if you are revising, if you are planning your day, if you want to have some formula sheets, if you want some practice in between the conceptual understanding and the mock test, so this box will do that. Okay, this is the box which is by the name JAIIB Increment Box. A very successful event, I would say, was conducted by our team on Sunday, this Sunday only, and the packaging is refreshing, I would say, and it includes various goodies for you, plus your study material as well. Let's see what all is included in this particular course. The course name is JAIIB Increment Mahapack, which includes JAIIB Mahapack 2.0 and this increment box, JAIIB Increment Box. In Mahapack 2.0, I hope everybody knows this is the USP of our Officers Adda 247. This is the product which everybody has great demand of. It includes daily live class, mock test, test series, AI Doubt Guru is being provided, artificial intelligence, we have started it, free PDFs, doubt sessions, mentorship sessions, recorded videos, ebooks, everything is being taken care of. But this was a part of your needs, what you need to crack this exam. We have something special which falls in needs also, plus some of it will fall in the wants. Being the student of economics, you must be aware of these concepts. Okay, so features are for your JAIIB Mahapack box or the JAIIB Increment box. You have JAIIB Mahapack 2.0. this package. Along with that, you have 4 book sets. 4 book sets. I have this opportunity to just reveal these books in front of you. These are the books. Okay, for every subject you will be having these books, and these books will help you in practicing questions. Good quality questions are there, starting from, you can say, basics till advanced level, all type of questions. And the important thing which you must note is the questions are not random questions that okay, from book we have prepared the questions. No, we have taken care of the quality. And how we have taken care? We have inculcated the topics from where questions have been asked by IIBF in previous year exam cycles. Okay, along with that we have PYQ topics for you. Okay, the PYQ topics are also there in the form of physical handbook, you can say, because most of you complain that everything is digital right now. We do not have anything which we can hold and feel and, you know, just keep on our desks, study table. Along with that, we have JAIIB formula sheet. Now, when I am telling you a specific study material, it is for all the 4 subjects, not only for IE IFS, not only for AFM, but all the 4 subjects: PPB, AFM, IE IFS, RBWM. Okay, so formula sheet is also there, and the formulas, I know every important formula is being noted down here, so you will save a lot of time. Then what else we have here? We have study planner. We have study planner for all of you, because in our sessions we tend to say that time is of essence. The bankers are subscribers, they have paucity of time, so we have planned the things for you here. Okay, so that you can just open up the topic and tick mark it, that if you have completed the topic, just put a tick here and a sense of accomplishment will be there with you. Okay, boost of confidence you will have. Okay, so this was the basic study material which we have, a quality content along with personalized touch, which is in the form of diaries. Okay, we have designed, our team has designed wonderful diary, starting with your personal record and everything which you need in a diary. Plus we have some bottles for you. Okay, and a pen, personalized pen as well. Along with that, you will also get affirmation cards. Affirmation cards are very important source of motivation, that even if you are not attending any class, if you read or go through these cards, you will find the most important things which you must inculcate in your preparation. Now, what are those important things? Every mentor, every faculty member of our team have written various messages for you, like our Praveen sir, concept is power. Likewise, we have Suprabha ma'am with be positive. So all these types of affirmation cards will be yours if you enroll in this particular JAIIB increment Mahapack. Okay, so I hope that things are very clear, that what all offering is being inculcated in your course. Now, how to avail this course? That is the question. But before that, I want to ensure you one thing, that these goodies in the form of this box will be delivered to all of you once you enroll in this pack on your address only, which you will be providing while subscribing to the course. Features we have seen. One important thing which we have included is free live class for you guys to assess the quality of content which we provide in our classes. Be rest assured, everything will be taken care of, starting from basics till the advanced level. You need not to refer to any other resource, that's our personal guarantee. and we will ensure that you are way ahead in the path of your selection. Okay, so just click on buy now when we talk about the JAIIB Increment Mahapack and apply a coupon code that is Y1003. As soon as you apply this code, maximum discount will be reflected in the final amount. Fine. So what are you waiting for? I think that your needs have been addressed using this box along with the wants. Okay, so a perfect balance of both needs and wants if you want, and do subscribe to our course. Okay, this was it from my side. If you have any doubt, any query, if you're watching it in a recorded format, do not forget to comment down below in the comment section. If you have any query, any kind of query, just feel free to contact us. Okay. Fine. Okay, so till then, till we meet in the next class of Champion Series IE IFS, which will be held on Thursday. Goodbye, take care, keep on revising and start making notes. Now is the right time to make notes because multiple revisions, I am assuming that you have gone through multiple revisions, and after revising multiple times, only after revising multiple times, you must make notes. Okay, so good night, bye bye.